Alright guys, I've been trying to get this video to you guys all day. This will not be a long video. I just kind of want to reiterate some things and go over Euro USD from today. If we back out to the 4 hour, right? So what we can see here is, alright, here's that the 4 hour fair value gap discount, excuse my spelling, and this is what price kind of responded to today. I thought we would get lower prices due to the fact that this 4 hour bar actually closed below that fair value gap. It's kind of something for you guys to study. Typically, we'd like to see, if price is going to respect the fair value gap, it'll reject. You won't see a body closure. And that's not to say that we still can't get lower prices at this point. But anyways, here's our Asian range, right? And the better move today actually happened in London. Now, of course, you guys know that I don't trade London, but that is where the better move on the euro dollar happened, right? So here's something that I've been kind of stressing to you guys lately, right here. So this level is a previous day's low, right? This level is Friday's low, right? So remember me always saying that price will use levels, like significant levels like this, previous day's lows and highs, monthly lows and highs, weekly lows and highs. It'll use those levels, and we'll see price basically respond to those levels or treat those levels as some sort of support and resistance, although we don't trade that way. But anyways, so here's an area here that swept liquidity, right? And then we see displacement, and here is our buy side liquidity built up, right? And today was more of a seek and destroy type of day. We see Asia high swept, Asia low swept, then this intra-session high gets swept, then the London low gets swept, and then the London high gets swept, right? So there was no true direction. On the previous videos, I've kind of been telling you guys that right now we're in a scenario where there's trapped order flow, and in those cases, right, you get this type of price action. There's no basically price is stuck between two ranges, really one range, but it's stuck between two breakers, right? So it's kind of trading breaker to breaker. And then on a more intraday basis, it's just whipsawing back and forth, right? But anyways, London sweeps this high, and then right after that, here is this is a fair value gap, right? So we literally have buy side liquidity and a fair value gap, which sets the stage for possible reversals, right? And then we see that buy side liquidity swept. Here's our displacement. Here's our structural shift, right? Here is our breaker, right? So remember, the highly probable breakers are breakers that have imbalance on the opposite side, right? So what price does, it trades back inside of this imbalance, fills in this fair value gap completely, and then we target this low right here, right? So entries should have come either from here to about the 50%. When it's a decent size fair value gap, what I like to do is split it in half, and then I'll take my entries from 50% of that FEG. Or you can be a little more conservative and just take entries and ensure that you get filled right where that fair value gap begins. Right, so this scenario here, this is our model, guys. This is the textbook model. We literally have buy side liquidity built, right? Remember, before we even consider an area as a point of interest, we want to see three things. We want to see a liquidity sweep, we want to see displacement, and then we want to see a market structural shift, which we get here, right? And to top it off, right, price engineers buy side liquidity. It takes that buy side liquidity during the London session, right? Taps into this imbalance, engages with this imbalance, and then we literally see the same process repeating itself, right? I took shorts today from this area here, right? So when price ran this high on the 1 minute time frame, there's a failed price swing that I took shorts from. But due to this price action, I even stated in the chat and said that I didn't necessarily trust the entire down move, but I didn't see any type of liquidity pool for them to play off of. Now in the lower time frame, there is a I want to say 5 minute, maybe like or let's see, 3 minute, 2 minute. It's like a 2 minute order block, or maybe it's 1 minute. Yeah, right here. All right. Yeah, so price just kind of whatever smart money traders would trade this area, right? It just traps these guys here, takes their stops, and then it rallies up, right? It taps into this imbalance. I didn't necessarily trust this move. Now, what we could have done on this that I didn't necessarily see, because I got hung up on price pushing deeper into this range, and that kind of swayed my perception, because what I should have saw was right here, right? So we're bullish, right? Structure from a micro basis is basically bullish here. And then what price does is it sweeps this liquidity pool, right? This liquidity is swept, taps into this imbalance, and then here is where pay attention to this level here, right? Okay, so I'll move this because you guys understand that this is the all right, excuse me. All right, here is the that's the sell side liquidity pool that gets swept, and then here is our breaker, right? Bullish breaker. You got me? Price pushes up, down, up. So here's kind of a low right here on maybe a 30-second time frame, or an order block on a 30-second time frame. Let's actually look at it. And I'm not advising you guys to go this low. I'm just trying to help make sense of how we could have been buyers here. Okay. All right. So when price pushes through this level, and then it actually closes above that level,